On today's episode, we are going to take a look at 3 stocks to watch this week. This is probably going to be one of my favorite earnings week. We have a lot of great companies. And on today's episode, what we're going to do is we're first going to do a quick overview of the company, take a quick look at their financial numbers, and then my overall thoughts. Like always, my name is Jose Najarro. By day, I'm a senior electrical engineer, but by night, I'm a self-taught investor. And make sure to check out the merch down below. If this is your first time on the channel, make sure to hit the subscribe button and don't forget to hit the thumbs up. It helps the channel out so much with the YouTube algorithm. Remember, none of this should be taken as advice as I am not a professional. And before we go any further, go down to the comments below and let me know what are some of the earnings you are excited to see this week. If I get a lot of feedback on at least one company, I'll probably do a video on them. But if you guys don't let me know, I don't know what you guys want to watch. While you are down there, you should also see a link to Weibo. If you sign up and follow that link, we both could get a free stock. And you should also find a link to my Discord channel. It's free for anybody that wants to join. I post every time I buy it, every time I sell there. And we have a group of 1,000 members there. So it's a great community that just keeps building. All right, so now let's take a quick look at earnings before we take a look at the 3 stocks. So on this Monday, we have JD, Baidu, and SPA are probably the biggest ones happening. It's usually very rare to see a excited Monday, but Monday with JD, I think it's going to be a pretty cool earnings to see. Tuesday, we have Walmart, we have Home Depot, we have C, which is probably one of my favorite companies right now, and we have NEO. I'm pretty sure that's the one I'm going to get a lot of comments on. So if you guys want me to do an earnings on NEO, make sure to let me know on the comments. On Wednesday, we have Target, we have Lowe's, we have Nvidia, which is another tier 1 for me. I'm pretty excited to see that. And I think that's pretty it for anything exciting on Wednesday. Then we have Thursday. Thursday, we have... doesn't seem like anything too exciting. Maybe some people might be excited to see BJ's, maybe Macy's. NetEase actually is one. It's a gaming company that I'm in. I'm very excited to see that one. Then we also have Workday, and I believe that's probably it. Friday seems pretty slow unless you're excited about Foot Locker or GSX. I feel like I've seen a lot of investors that I follow talk about GSX. Not one I'm in, but maybe they might want to see that one. All right, so the first company we're going to take a look at is JD.com Incorporation. This is NASDAQ ticker JD. It is a Chinese company. Right now it's sitting at $92.08. It was up about 6.6% for the day on closing on Friday, and after hours is up another 1.3%. Year-to-date returns are about 144%. Congratulations to any longs holding this company. It's great returns. Right now, it is about flat from its all-time highs. We have seen a few stocks pull back from their all-time highs. We're seeing about 10, 12%, but it's pretty impressive that it did see a pullback around this point right here, but it is now back to its almost all-time highs. If you guys don't know JD is pretty much China's largest online retailer. It is the biggest overall retailer, as well as the country's biggest internet company by revenue. We're going to take a look at the different markets they hit, but JD is in the main market they hit is e-commerce, but they're very innovative. They're doing like logistics stuff. They're doing things with drone delivery and stuff like virtual health, like Teladoc, for example. So if we take a look at their most recent earnings, was 271 billion of renminbis, which I believe is Chinese yuans. My apologies for pronouncing that. But most of the revenue, over 90% of the revenue, maybe even 95% of the revenue, comes from JD Retail, and this is their e-commerce platform. And one thing I want to say is Q2 non-GAAP earnings per share were 50 cents and GAAP earnings per share were $1.48. So this JD is a company that is profitable in both non-GAAP earnings and in GAAP earnings. Their total revenue in terms of United States dollars was $28.5 billion. This gives it, this was actually an increase of about 30% compared to the same time last year. So we're seeing strong growth in their revenue as well. And I don't think I talked about it. JD has a market cap right now of about $139 billion. And next we can see the other maybe 5, probably not even 5% of the total revenue comes from new businesses. And here in the new businesses, they have their logistics revenue. They have what they call JD Health, which is a form of like a Teladoc in China. They also invest in different companies that they believe are going to do that, and that's also included here. And like I mentioned, they're very, very innovative. One of my favorite things about JD is just the innovation that they're doing in their overall business, from the way they're handling logistics, to becoming more of like a fully automated logistic company, how they deal with new technology via drones, the movement to telemedicine as well. So I do believe this is a very innovative company, and I'm very excited to see their earnings. Next, let's just take a look at some numbers for JD. First thing, like I mentioned, they are profitable already, and they do have positive cash flow from operations. Looking at this graph right here, we can see this revenue is expected to grow dramatically. Revenue growth is expected to grow 16.2% on average annually for the next 3 to 5 years. Like I mentioned a lot in this channel, anything growing over 15%, I consider a nice growth stock. So this is growing up. This is definitely a growth stock for me that is profitable and that has positive cash flow from operations. Next, let's take a look at their balance sheet. Their balance sheet is also pretty impressive. If we take a look at cash and cash equivalents compared to debt, it's almost a 1-to-5 ratio. They have 5 times more cash than debt. So this is a very, very strong balance sheet in my opinion. And this is good because they already are, even though they're already profitable and even though they have cash flow from operations, they still have a strong balance sheet. So now let's take a look at some technicals and my thoughts. First, the technicals. Right now, what we're seeing is JD overextended. And technicals I don't use when opening a position, but I do use when I want to add into a position. Right now with earnings, the first thing I do see is it is a bit overextended from its moving averages. And what normally ends up happening, it's not a guaranteed, but what ends up happening is it does end up pulling back to those averages. We see it happening here. We see it happening here, here, and now we've seen it happen here once, and now it's back to overextended. But right, we can have great earnings this coming Monday that can push this even higher. Sometimes what could end up happening is not that the stock price pulls down to the moving average. Sometimes the stock price could just end up flat and the moving average end up finally reaching that price. So like I said, it's not always a guaranteed thing that it will pull down. Another thing I'm seeing is right now the stock price is at, I'm not seeing much volume. The heaviest amount of volume I'm seeing between $78 and $83. That tells me this is where a lot of people have bought this stock, and that tells me there's gonna be some decent support at this level. But right now the stock price it's at, I don't see much volume happening there. So what do I like about JD? First, the overall market is in. E-commerce right now is a market that I believe will continue to grow even after COVID situations. They're also a very innovative company with all the things they're working at. And make sure to check out my previous JD videos. I mentioned some of those innovations in them. Revenue growth, they're expected to grow dramatically in the upcoming years, and they also grew a lot this quarter. They have a very, very strong balance sheet as well. They have almost 5 times more cash than debt, and they're also cash flow from operations positive. The only few things I don't like about JD, the first thing is it is a Chinese company, so that comes with international risk, and it also comes with risk with the country that there's a lot of tension with the United States right now. So, but that doesn't deter me, right? That only makes me limit my exposure. The other thing I don't like right now, stock price is a little bit overextended from its charts, and it's also in a price where there's not too much volume at, so too much support at. And what probably is I wouldn't say that's the only things I don't like about JD. All right, so the second stock we're gonna take a look at is probably one of my favorites. This is a tier 1 stock for me, and I'm so happy to see earnings coming up. This is C Limited, ticker SE. But before we go any further, guys, don't forget to go and subscribe to my new channel, Jose Najarro Entrepreneur. I'm doing new videos every Friday, Sundays, and Wednesdays. So don't worry, I'm not gonna stop doing videos here. This second channel is, I'm a very entrepreneurial person, is that even the word? And I've done so much in the past 6-7 years to try to become more successful, to try to grow myself, and I want to share some of those things I've learned throughout my process. So make sure to check out that channel. Like I said, Jose Najarro Entrepreneur. I truly appreciate it. All right, so the second stock we're taking a look at is C Limited. This is ticker SE. Right now it's sitting at $181, and it was up about 1.5% for the day. Market cap right now is about $88.5 billion, and year-to-date returns have been 353% to investors. So congratulations to anybody holding long. I've talked about this stock for previous amount of times. I've talked about it in the 80s, in the 70s. I've talked about it when it was in the 120s and again in the 140s. So it's definitely one of my favorite ones right now. It is down about 2.8% from its all-time highs right now. So it did see a pullback, but it's climbing back up there. For those that don't know, see, it is pretty much in 3 of my favorite markets right now. And that is one, the digital entertainment and the gaming. And it's doing that with Garena. It has one of the top games right now, which is Free Fire. This is hitting amazing numbers in Southeast Asia, and this is a Southeast Asia company. It's in Singapore. It also has Garena is also becoming very popular in Brazil. Shopee is another one that is in the e-commerce and is also entering the Latin America, Brazil. It has become, I took a look at some of the data. I think it's become one of the top 10 downloads in Brazil, app downloads in Brazil, in both Androids and in Apple. That's doing amazing, Shopee. And then there is C-Money, which is the fintech. So 3 amazing markets, in my opinion, that are going to continue to grow. Now let's take a look at the revenue breakdown for C. So C, first, if we take a look at revenue, this previous quarter of second quarter of 2020, they had about $1.3 billion of revenue. This was up 93% compared to the same time last year. That is insane growth. Then if we take a look at the revenue breakdown, this dark blue, most of that revenue, over 55, maybe 60%, comes from the digital entertainment, and this is pretty much the gaming section. Then the other, I want to say maybe 40 or so percent comes from EC, which is their e-commerce market, and a small portion comes from the financial market, and then some other services that don't really have, that are too broad to really put it into a specific group. So we can see the 2 major leading ones right here are the digital entertainment. That's up 62% compared to the same time last year. And the overall e-commerce revenue, which is up 188% compared to the same time last year. I do want to say is right now, GAAP earnings per share for that quarter were negative 68 cents. Right now, C is not profitable. Now let's take a look at some numbers. First, if we're taking a look at this revenue growth, it's expected to grow dramatically in the upcoming years. We are seeing that it is not cash, it's not profitable like I mentioned right now, but it is expected to be profitable by the end of 2022. That's okay as long as they have a strong balance sheet, and that's what we're going to have to take a look at later on. They also do have cash flow from operations that are kind of breaking even, so it's not too much of a loss. They're not burning too much money right now. Again, if we see that they have a very strong balance sheet, it will be able to help me overlook certain things like this. So if we take a look at future growth, this one's expected to grow 28% on average for the next 3 to 5 years. This is a super growth stock in my opinion. Next, let's take a look at that balance sheet. They have about $3.4 billion of cash and short-term investments and about $2.1 billion of debt. So they have plenty of cash at hand to pretty much pay off all their debt. A strong balance sheet. I wouldn't say completely super strong balance sheet, but definitely a balance sheet that they'll be able to survive for the upcoming years, as they are not profitable at the moment. All right, so now let's take a quick look at the technicals for C. First thing, is it overextended? Right now, sitting at the stock price it's sitting at, it seems to be a bit overextended from the moving averages that I look at. The other thing I'm seeing, are we in volume in areas where we see strong volumes? Strong volumes at certain stock price tells me they have a nice amount of support there. I do see a lot of support, and this is going to be a very wide range of between $145 and $175. And this is where we've been seeing it trading a lot lately. A lot of people have been buying in at these prices. So what are some things I like about C? There's many things I like about C. The first thing, the overall market they're in. They're hitting 3 markets that I am completely bullish on. What are other things? Revenue growth. They saw strong revenue growth the most recent quarter, and they're expected to continue that growth as the years progress. They have a strong balance sheet. Like I want to say, it's not a super strong balance sheet. We saw JD a few minutes ago. JD, that's what I call a strong balance sheet. This one has an okay balance sheet. What don't I like right now? To be honest, the main things I don't like right now are, and what are other things I do like? I do want to mention the overall expansion to like Latin America, Brazil, and the expansion they're seeing in other countries in Southeast Asia is just amazing. So that type of growth is is to me one of my favorite things. There are some things obviously I don't like about C. The first thing is it's not profitable right now, and it's not expected to be profitable right now. The other thing is it does not have cash flow from operations positive. It means it's burning money from its everyday operations right now. The other one I do want to mention is C is being backed up by huge giant like Tencent. Tencent owns about 30% of the company, which is amazing to have someone big like that backing you up. And with Tencent, they have a super team going on with Huya, which is a live streaming platform that also has some form of market in Brazil. And I do believe this power couple with Tencent, Huya, and C is one that is going to dominate that Brazil area and bring more viewers to the live streaming and to the games that Garena has. So another one I'm super excited to see earnings. And the final one is another tier 1 stock for me. This is Nvidia, ticker NVDA. But before we go any further, you guys should also see a link down there below for 7 Investing, where every month they recommend 7 stocks for $17 a month. If you use my link or promo code Jose, Jose, you get $10 off the first month. May I say, yes, this is an affiliate program, but I use their services and would recommend it to anyone. All right, so Nvidia right now is sitting at $531. It has a market cap of $328 billion. Year-to-date returns are 122%. Congratulations to every long-term investor on this one. And right now, it is down about 8.8% from its all-time high. So it did pull back. For those who are not familiar with Nvidia, Nvidia works in GPUs, graphics processing units that are pretty much used to run the world. All right, so also let's take a look at the 4 markets that these GPUs are mainly used for. The first is the gaming. The second is the data with the high process computing, artificial intelligence, and machine learning. They've actually just done a few acquisitions to overall increase that exposure as well. And I do believe that is very bullish. They're very aggressive with acquisitions they're doing right now. The third market is professional visualizations. Here you use graphics for workstations. Like I mentioned, one of my favorite stocks right now is Autodesk. I talked about it in yesterday's episode. Workstation GPUs are used for those modeling platform softwares. Next, we have the auto. They are working on some form of autonomous vehicles with the process of machine learning, artificial learning, thanks to the GPUs. So they are hitting 4 markets. If we take a look at revenue growth in these past years, the data center market has increased dramatically. Look at that growth they're seeing in the data center. They're seeing growth in the auto. They're also seeing growth in the pro visualization and the gaming. For right now, for this most recent quarter that happened, I'm sorry I don't have the graphics for that, but for this most recent quarter that they happened, data center is now was the biggest revenue that quarter, followed by gaming. Data center and gaming make up most of the total revenue for this company, and it's 2 markets that I am very, very bullish on. Then the second 2, pro visualizations and auto, I want to say probably like 15% of total revenue after that. Now let's take a look at growth for Nvidia. First thing we're seeing is this revenue growth is expected to grow as the years progress. It is positive in earnings and it is positive in cash flow from operations. You guys are going to be shocked. They'd be like, Jose finally gives us a company that is making money right now. Revenue growth for this company is 14.8% on average for the next 3 to 5 years. This, again, anything growing at 15%, I consider a strong growth. So this is right hitting that limit of that growth stock. We're going to also take a look at this balance sheet. This is another strong balance sheet. We saw already that it was profitable and it had a positive cash flow from operations. So we don't have to be that strict in this balance sheet. If we take a quick look at current investments and cash and cash equivalents, is about $11 billion compared to $7.5 billion in non-current debt. They have enough cash to pay off their total debt, maybe even their total liability. So this is a very strong balance sheet for a company that is profitable. Now let's take a look at the charts for Nvidia. First thing I'm seeing for Nvidia is it is not overextended at all. It's sitting at its prices moving averages. Next, let's take a look at the volume. We are seeing strong volumes, and again, this very wide range, but we're seeing strong volumes between $490 and $575 is what we're seeing most of that volume range for this company. So that tells me this is going to provide me some support around these levels. What are things I like about Nvidia? Again, many things. This is a tier 1 stock for me, like C. So there's a lot of things that I like. The overall market is going. It's in the gaming market. It's in the data center market. It's in the artificial intelligence market. It's in the machine learning and autonomous vehicle market. What is there not to like? The revenue growth is expected to grow a nice, healthy growth in the upcoming years. It has a strong balance sheet. It is profitable, and it is positive cash flow from operations, and it's not overextended right now. What don't I like about Nvidia? The only thing I probably would say that I don't like about Nvidia right now is, honestly, I can't say a thing. Maybe I want to say at current numbers it might be a bit overvalued, but I'm here looking at the 5-year term plan, and for my 5-year goals, I don't believe it is overvalued. But if looking at in the past, in the month or two, yes, it might be overvalued. So I want to say that's probably the only thing I don't like about Nvidia. So I hope you guys enjoyed today's episode. Like always, don't forget to hit that thumbs up. It helps the channel out so much. Make sure to let me know in the comments what are some earnings you guys are excited to see this week. Also, don't forget to check out that second channel. I truly appreciate it. Make sure to subscribe. I'm pretty excited about it. Take care, guys. Have a good night, and see you next time.